next up on the iron ore list, Kumba Iron Ore. So this is the asset which is contained within of Anglo American. We'll talk about that in a minute. So we're talking about iron ore producers specifically today, not groups that have got interests in this environment like Exxaro and Anglo. So Kumba comes to the market in 2006. Remember, its roots were the mining division of Iscor. Then it became Kumba Resources. That was spun off. The various parties got involved. Anglo American swooped, so they have around 70% of the company and they control it, there's no question. Their principal iron ore operations are in the Sishen area. That's in the Northern Cape. And there's that fabulous long railway line which joins that right down to Saldanha Bay, where the coal and the iron ore rather is exported from using those big feeder loaders. It's been a very impressive growth story. They've added a lot of capacity to the mine. It's been a fabulous performer. Unfortunately, it's gone into reverse. We'll see the share price in a minute. Market cap of this one is 50 billion rand. It was quite a bit higher. You'll see that in a minute too. Price to earnings ratio, this is the point that Wayne just made, a lot lower, 4.5. That's pretty anciently low. You don't see those kind of levels very often. Dividend yield is showing up here on a historic basis as 14.96. But I suppose that probably includes some of the distributions in the prior year, which they're not kind of matching at this particular point. Okay, Wayne,
Right.
how does this one stack up?
Kumba, first of all, let's just talk operationally. Operationally, it's actually fantastic. They've got their new mine, the Kolomena mine. They've done well there. They had some technical issues at Sishen about 2 years ago, but they've upped production massively. And in fact, the only thing really limiting their production is the capacity of the railway line. So operationally, they've actually done exceptionally
Although the railway line, they sort of figured out ways of making trains go in both directions or something.
Yeah, so they can do more, but operationally it's good, and this is truly a low-cost producer. They still make, I mean, in the good days, they made 80% margins. They're still making 40% margins. So this is one of the true low-cost producers, and they'll still make money even if the iron ore price falls to $40. They'll still make money. So they're not under threat as a company at all. But of course, when the price of what you sell falls like it has, your profits.
What are you going to do?
Look, you're protected a bit by the weaker rand. So also a December reporting period, their profits actually were not down much at all. They were actually down marginally, and the dividend yield of 15 includes, let's call it 3 months of bad iron ore prices. Obviously, their dividend is going to come down. They will not sustain the dividend at the current level.
Having said that, Anglo American likes the cash. So
and they got
cash.
They generated in December, in the 6 months to December, they generated 20 odd billion cash. I mean, it's massive. Okay, they paid royalties, they paid tax, they paid dividends out of that, but that is actually the cash generative. Now, even if that halves because of the lower oil price, they're still very, very cash generative.
But look at that share price. It looks like a loaf of bread going down and sideways. So it hit 600 rand a share, and it's currently trading at around 150 or something like that, 160. So the question is, people bought the stock, they did well. Now what do? Do you hold this one and wait for the recovery?
This is my personal biggest dilemma. I own this share.
Okay.
And I've owned it for a while now, and we've been burnt totally.
Well, my mother owns some of these in her investment accounts. I want you to tell me now what she should do.
Look, at a 4 PE, we know it's historic. We know that PE is going to double, but 4 PE on an historic basis is as low as these shares ever get, even when there is a global recession, even when the world is coming to an end. At a 4 PE, you're either going bankrupt, which they're not, or it is taking a longer term view, an extremely good opportunity to buy it. And if you hold it, like I do, and we've been burnt. I mean, I didn't hold it at 650, thank goodness for that, but I bought it at 300, 400, now it's 150, 160, so I've been burnt on this one. But you can't capitulate now. You really can't. So you have to just get the tiniest bit of good news, and shares at a 4 PE, and the company itself is still making money. It's not showing a loss. It's still profitable.
Solid,
good operations. The whole lot. I don't think you've got any other alternative but to hold, or and if you like a bit of risk, buy it at this level. It might fall further, but on a 2-3 year view, it's got to be good value.
So how are you going to call it?
Now I'll call this one hot.
Hot. Okay, I'm going to go with not hot just to reflect the balance here. But I like that argument, and I think it's certainly a hold if you own.